Good evening, everybody. Got a nice brisk fall evening here tonight. So we've been getting a lot of requests on what my definition of convergence analysis is. So what we do is we try to put the major pieces of visual evidence that our reversal signal or pattern breakout has improved probabilities by putting other indicators, or not putting other indicators, analyzing, or not even analyzing, visually recognizing where other support and resistance levels might enhance the convergence analysis. And the term for convergence analysis is when you look at a chart, not only do you see something that is one piece of evidence that's confirming the reversal, but maybe two or three or four all in the same glance. And obviously the more indicators that we can see that could be confirming where everybody else is buying or selling based upon where that signal occurred, the more indicators that confirm that, obviously the better the probabilities. So this is all kind of leading up to convergence analysis, where people always ask, when you have so many good-looking charts, how do you know which one to pick? And that's part of the cultivation process that doesn't take a long time each night to analyze. I mean, it takes just a matter of seconds to analyze which chart might have a better advantage to it than another chart, because we happen to see a good reversal signal or pattern breakout occurring right at a level where there's two or three or maybe even four other indicators coming together. So basically, convergence analysis is putting the probabilities in alignment. We're going to be working on what is probably the most, the second most, the T-line. Well, we got the T-line in here. But this is all leading up to that. This is information, that the more pieces of information you can see in one glance, the higher the probabilities that there's been a reversal or somebody's making a decision at those levels. We're going to be doing a convergence analysis training this coming Saturday, which is 2 days away, 2 days from now. But it's the type of training that we kind of project is going to be about 3 hours. It usually goes to 4, sometimes 5 hours. But essentially what it does is it takes each indicator that we're aware of or that we are familiar with candlestick analysis, and how we apply that to improving the probabilities of picking out the best trade setups. So it boils down to that if we have a good day in the market and your scans have found 40 different good charts for the next day or whatever time frame you're trading, the rhetorical question is, well, what do we do with 40 charts? Well, obviously we want to find the best ones out of those 40 charts. And this is just a very simple process to start taking things down to finding the highest probability of not only the probabilities of that trade moving in the right direction, and I'll kind of lean toward the bullish side, but they work just as well on the bearish side. But what are all the indicators that tell us our bullish signal is confirming, and how many other indicators? So the moving averages that we have on our charts, you've seen, is relatively simple. The 200, the 50 simple moving average, that's because everybody in the world uses those as their decision making for their portfolios. I've got the 34 exponential on my charts because they work reasonably well. And I say reasonably well enough that it's not cluttering up a chart to have it there, and it does identify when things will start turning around or might be a reversal area. And then the T-line, the 8 exponential moving average. So moving averages, why? That's because where everybody's making their decisions. So on our charts, we've got the T-line, the 50, and the 200. Guess there's, sometimes we have the 20, but I've exchanged the 20 for the 34. Didn't really have to exchange it. I could keep the 20 on there and keep the 34. So here's what we have as far as the advantages of using candlestick signals with moving averages. We know what the signals tell us. And the number one criteria for any investment reversal decision is the signal itself. You could take everything else off the charts and just have the signals, and you do relatively well by the signals at the tops and the bottoms of each price move. You enhance it by where do you think everybody else is watching? They ran into resistance at the 50, pulled back, came back up to the 50. It looked like it was going through a bobble breakout. But the kicker signal taking us down back through the 50 and the T-line with stochastics heading down, that the only one factor we should have in our mind is the probabilities just went south, or the probabilities of this trend going south has dramatically improved. So if you were long, you're out of that position. If you're thinking of going short, it now becomes a high probability trade situation. So the one moving average that is the most important, again, you could take everything off the chart, but the T-line, which is the 8 exponential moving average. And Jace, are you in here? Jace was asking today in the chat room, why the 8 exponential? What's so magical about it? And the answer is there is nothing magical about it. It's just that the proof of the pudding is the fact that just the statistics show us that it acts like a natural support and resistance level of human nature, which basically goes into the category of Fibonacci characteristics. So very simply stated, if you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. So again, there's the 200, the 50, and the T-line. This probably is the 34. But that's the T-line rule. So I could take everything off this chart, maybe keep my stochastics on down here, and just the T-line, and I could trade very successfully. But the more pieces of evidence that we have on our chart that a trend is moving or that's where they're buying or selling, as long as we're not cluttering up the chart, we want to keep it as simple as possible. Because I always come back to a basic factor. The most important indicator on this chart is the signal itself. Everything else is just confirming indicators. When you see sell signals and a close below the T-line, T-line rule, you stay short until you see a candlestick buy signal and a close back up above the T-line. Now, why is that important? Because there's so many places where you might say, oh, there's a bullish harami right on the 50. Maybe it's time to start covering. Well, you still need the confirmation of the T-line. And then remember, we've got a simple caveats or rules to the T-line. The further away you move from the T-line, the higher the probability it's going to come back and test it. So in the realm of candlestick analysis, you might have 1 or 2 rules, maybe 3 rules at most, on each individual signal. And then we also have what the Japanese rice traders provided us that kind of told us what was going on in investor sentiment. Rules like this. In this case, if you're moving too far away from the T-line and you see a confirmed sell signal, and again, this is based upon the doji rule. The doji An indecisive trading day looks like almost a cross. But if it opens lower the next day, the probability, especially if you're in the overbought area, is you close the trade immediately. Now, that's what we would do. Well, what is our next target? Well, we know the further away we move from the T-line, the higher the probability it's going to come back and test it. So we got a lot of people saying, well, should I close here because it's still not closing below the T-line? The answer is your first criteria is the signal itself. Everything else is a confirming indicator. So you have moving average truisms. And one of them is that if a moving average has been acting as support and it's breached, once they go through it, they'll usually come back up and test it to see if it's going to act as resistance. So this is why the moving averages become very important as targets. No, the Japanese rice traders didn't have the T-line. Remember, the Japanese rice traders developed this back in the 16 or 1700s. When I was first learning candlestick analysis, the first couple books that I got my hands on, Chapter 1 was not the signals or anything like that. It was telling you how you built a box that you put a light under it. It used to be they put a candle under it, but now you could put an electric light under it, and then you have a piece of glass on the top, and you put your rice paper on top of the glass, and you drew your formations, and the light underneath would help you see the formations that much better. Now I lost track. So obviously, with them developing this back in the 1800s, they didn't have, unless they really wanted to sit down and calculate, they didn't even have, I doubt if they even knew how to use moving averages. They were just using the signals. So this whole chart would have been blank other than the signals themselves or the patterns. So if you come up through a resistance level, they'll come back and test it to see if it's going to act as support. Why is it important to see where the next target is? Because as a candlestick investor, we can see when it came up and hit the 200, it did a shooting star. What was that telling us? Get ready to start taking profits. Ed, your test is working well. If they come back up through the resistance level, they'll come back and test it to see if it's going to act as support. Now, we can see a little bit faster than everybody else that it might be acting as support. There's our bullish doji harami, which means it didn't close back below the 200. It didn't really close below the T-line. And if it opens positive the next day, what do we know about a harami? It tells us the selling has stopped. If they open up positive, it's confirming. We often get asked the question, how many days or what percentage move does it take to move to tell you that your trend in progress? How many days? The answer is 0. All we need to do is see that the signal is confirming, and we can pretty much understand what the decisions were that they were making right at that support level. So what does that do for us as investors? Two things. One, if we're buying early because it's confirming the signal, and that is the whole point of candlestick analysis, is that the Japanese rice traders told us when there was a reversal signal and what would confirm it. We don't have to wait 2, 3, 5 days or 3, 5, 7%. The breakout levels are based upon, Casper, based upon a pattern setting up. You could also kind of make that a fry pan bottom, breaking out right at the same level. So anyways, here is something that is very high profit trade setup, that if we can see a pullback after coming up through a resistance level, and we can see that there's buying or they've stopped selling right on that what was a resistance level, we can be buying fast or early. Again, that does two things for us. Obviously, it gets us early on our next move, and two, if it fails, we're right back out with a small loss and go on to something else. But we still wait for the confirmation of the signal. Yes. So if you can see this, there's a little bullish doji harami right here at this level. And what is confirmation? One, the doji rule. It's going to move in the direction of how they open after a doji. So it opens positive, so it's doing the doji rule, number one, and the harami, telling you the selling has stopped. If it opens positive the next day, tells you the selling has stopped and they're buying again. So these are just if you study Jerry, go up to the top of your page and make sure you're clicked on screen sharing. So anyways, you can use this to see what type of signals. People say, well, you're buying here, what's your next target? I usually say watch to see what they do when they get to the 200. Well, they came up here and did a shooting star. That told you they failed. If it opens lower the next day, you're closing out the position. Came up through this time. Now they come back and test it to see if it's going to act as support. When you said hold until you see a sell signal and below the T-line, by sell signal, do you mean one of the 6 berry signals? You did not mean any red candle, correct? Yes, correct. There are going to be red candles in an uptrend. So you've got two parameters. One, you can see a selling day, but as long as it's not doing a signal, number one, it's not a reversal. So I'm going to try to clarify this real quick. If you see a sell signal and a close below the T-line, doesn't necessarily have to be on the same day. You might see a shooting star, and the next day it closes lower. For example, right here, I'd be closing this out even though we haven't closed below the T-line. The T-line is the 8 exponential moving average, yes. The T-line's 8 exponential. You know, you're all scrolling faster than I can read, which isn't very fast. All right. Carrie, when you said hold until you see a sell signal and below the T-line, by sell signal, do you mean one of the, yes, one of the 12 major signals? You do not mean the red candle. Correct. At that buy point on moving average, would you sell it after it went below the T-line before going higher? At this one, Lou, at that point, yes, I would sell it on a lower open. Because we have a shooting star that failed. That's telling us I want to be out of this now until they can come back up through the 200. I don't have to see it close below the T-line in this case because I've already got other pieces of evidence that that's where they failed. What's my worst case scenario? I can always buy it back if it does kind of a J-hook pattern. But the probabilities just told us a shooting star failing at a major moving average. What do you think that shooting star was caused by? Everybody that was watching to see what was going to happen at the moving average are taking profits. That's what we're visually recognizing. Should we then wait for the pullback before putting on the position, as opposed to putting on a position at the actual breakout? Oh, more than likely, you would not be putting on the position here, correct? You'd have been buying here, and you'd be waiting to see what happened once we got up here. It went through. Now, and you're up here in the overbought area. Look at your bearish left-right combo right here. This is awfully small, but That told us that they were pulling it back. Where were they pulling it back to? That's what we're watching to see if they're going to support at the T line. Can we use a signal in case of price action trading? Can we use a signal in case of price action trading, like trend line break, wedge? Exactly. Hirsch, this is exactly what we're doing with all this. And this is where I'm going to kind of get into convergence analysis. It's using all that information that everybody else sees. We can just see it a lot better. Just out of curiosity, do you know if there are any examples of authentic, original, ancient Japanese candlestick charts anywhere so we can see how they look? I don't know that as an answer, but I can tell you this. This chart, which was done a while back, could be 3 weeks old, 3 months old, 3 years old, 3 decades old, or 3 centuries old. They're going to look exactly the same because it's all based on just the formation of the candle. It's a candle that's created by where it opens and where it closes. This was developed the same way 200, 300, 400 years ago as it is now. I don't think it's any great difference as far as exponential to simple. So here's the one thing I tell people. If you want to play around with it and see if something works better, there's no problem. At least you have a framework or a basis to come back to. Some people might want to put the 9 simple on or the 10 simple or try the 7 exponential. It just seems to work extremely well, and this is now with probably 15 years now of using the T-line. And I tell people, coming from being the worst investor in the world, I got out of the brokerage business because I realized the brokerage firms had no more idea about which stocks were going to go up or down or what the market was going to do than anybody else. So I got out of the business. Then when somebody dropped candlesticks on my desk, it took me months to pick it up, to look at it, because I figured anything as sophisticated sounding as candlesticks wasn't worth the time and effort. But when they badgered me enough that I finally picked it up one night and said, I better do this just to pacify this guy, I looked at it, and the first thing that struck me was, this makes sense. And the more I kept looking at it, the more sense it makes. And that's kind of the big reality aspect that most people that start learning candlesticks realize is there's nothing difficult about this. It's all common sense put into a graphic depiction. So it doesn't matter whether you're trading somebody's trading program or you're following somebody like Hubert or anybody. If you put candlesticks on your charts, you're going to see a lot more clearly when they're confirming whatever trading program you're doing. Thomas, these rules are exactly the same. This could be a 1-minute chart, a 5-minute chart, or a 10-minute chart. The definition of a candlestick chart is that it is the graphic depiction of everybody buying and selling during a specific time frame. It works just as well on the 1-minute chart as it does the monthly and everything in between. Yeah, exponential is a little bit faster. What is the difference between a shooting star and a gravestone? Jake, the shooting star usually occurs at the top of a trend. The ultimate shooting star is the gravestone doji. Just like the ultimate hammer signal, which occurs at the bottom of a trend, the ultimate hammer signal is your dragonfly doji. So it doesn't matter what you call them, they still represent a change. Fibonacci numbers seem to work best. Yes, Fibonacci numbers are kind of a natural factor of human nature, not human nature, of nature. I think they even said that if you look at leaves from a tree, that the angle of the kind of the little veins in those leaves are 38%, or a Fibonacci number. Dwayne, yes, that's. I always told people after I got out of the business that brokerage firms are in the business to make money, not necessarily for you to make money, for them to make money. And I always came back to the process that the best person to control your own financial destiny is yourself. So when I started learning candlesticks, the thing that kept striking me is this makes sense. This is just common sense. And I could look at things and say, man, this is where I usually would be buying for my customers or recommending we should buy. Then it would go like this. And I'm thinking, how come every time I buy it goes down? That's because of normal human nature. Or when I get ready to tell people, this is bad, let's get out, then I turned around and went back up. That's because brokers aren't any, I don't want to say analysts. They're just salesmen. Okay. A gravestone doji occurs at the bottom after a downtrend, and a shooting star occurs at the top. Yes. Or a gravestone doji is a hammer at the bottom, and it's a gravestone doji is an inverted hammer at the bottom, and a shooting star at the top. Do these signals apply only around the 200, or do they present at all places, Thomas? That's the whole point of candlestick analysis, is whatever everybody else is watching, whether it's Bollinger Bands, Fibonacci numbers, trend lines, moving averages, anything everybody else is watching, we can see exactly what their decisions are. Okay. Oh, we're way behind schedule. So here's another one. This is called a blue ice failure. This was named by my late friend Dave Elliott of Wall Street Teachers, that if you could see that something was acting as support, if they fall through that ice, what do? They try to come up and find the hole they fell through. If they can't find it, they drown. Where do they go? They go to the bottom of the pond. Just a very simple. Now, you take that out, you still got a Barry's J-hook type pattern. What if there is a gravestone doji at the top? That is your ultimate shooting star signal. There's basically 12 major signals, which through the years I narrowed down so that you didn't have to spend time and mental energy learning the 50 or 60 candlestick signals. If you just learn the 12 major signals, those are the most powerful, the most plentiful, and it will put you in situations where you're always going to have more trades than you'll ever be able to handle based upon candlestick signals. Now it's just a process of cultivating those good signals or patterns down to which ones are the best ones. Oh, the ultimate, a shooting star, no. A shooting star is a small body with the tail to the upside at the top of a trend. And the ultimate shooting star would be a gravestone doji where it opens at the bottom, trades up, and comes right back down and closes right there at the bottom. That's the smallest of so that's your ultimate shooting star. Doesn't have a body at all. All right, so what becomes a very effective trading platform? Watching to see what happens once they pull back to a support level. So On this one, you can see oversold condition of the stochastics. 1233 is my stochastics. Doji, bullish confirmation. So what are all the pieces of evidence that we're seeing right here? We're seeing a big morning star signal that's supported right smack dab on the T-line in the oversold area and confirmed by closing back up above the T-line and this breakout level. Where do you think your next target's going to be? Up here. Buying here is what cut through my emotions that where do most people hate to buy? Very rarely do they buy when it's time to buy because everything is bad, news is bad, the talking heads, so-called experts are telling you how bad things are. So basically allows you to see where everybody else, where the smart money is buying. Or on the converse side, where everybody is selling at the resistance levels. Is a dragonfly doji a sell signal? If it's occurring at the top, it becomes your ultimate hanging man, one of the 12 major signals. So here's the kind of the that if you were buying down here, supporting, buy signal, close above the T-line, where's your first target? Up here at the 50. Looks like it's going through. You hang on to it if you were long. But then it closes as a shooting star, closing back below the 50. There's your shooting star in the overbought area. So what's the simple rule of a shooting star? If it opens lower the next day, close out the position immediately. So the moving averages just allow us to see much more accurately where everybody's buying and selling. They fell through. This was that first big downdraft, I forget how, a couple years ago. Fell through the 50, came all the way down to the 200, and bounced. So what were we doing down here? We were covering any shorts, and we're buying. But once it got back up here, what did it tell us about the support level? It's now acting as resistance. It was time to cover your or close your longs and go short again. Buying down here, close above the T-line. Where was the next target? See what it does at the 50. Got right up here at the 50 and did a doji. Made it very simple. If they were trading lower the next day, you close it out. That told you the 50 was acting as a resistance level. Is a shooting star always red? No. The body of a shooting star or a hammer, the opposite of a shooting star, or an inverted hammer, the body, it doesn't matter what color the body is. It's usually very small. It's the tail or the shadow that tells you that's where the change of investor sentiment is coming from. So observe the obvious. This is what candlestick signals have done for me, is made things very obvious. There's your morning star signal. A big down day, a doji day, and a bullish candle that closes more than halfway up this candle. With the added enthusiasm that the further it closes above the halfway point, the higher the probability there's been a change of investor sentiment. The further it closes above the halfway point and, in this case, closes above the T-line, remember our simple rule, if you see a candlestick buy signal and a close above the T-line, you're in an uptrend until you see a candlestick sell signal and a close back below the T-line. What about long-legged dojis? Well, if it's a doji, Jake, the body doesn't mean a hill of beans. It's usually very small, and it doesn't matter what color it is. The long-legged doji is going to have the significant indication that there was indecision because of the big shadows to the upside and the downside. So observe the next thing. This is, again, what I call convergence analysis. If I was analyzing the trends, look what was happening up here. You were up in the overbought area, starting to move away from the T line, and you have an evening star signal. Now, it could have done one of two things. It could have bounced back up and did a J-hook. Or the fact that it closed below the T line after a sell signal told us we're in a downtrend. Where, as soon as it hit the 200, there was our morning star signal, and it closed back up above the T line until you see a sell signal. This is convergence analysis. Morning star signal, close above the T line, a bounce off the 50 in the oversold area. That's strong reversal. Yeah, technically the true doji doesn't have a body. It's just a straight line. But as long as it has, I consider that a doji, even though it has a wee little teeny body. How long do you wait after opening negative the next day to confirm the trading is indeed negative before closing out the position? Carrie, no, almost immediately. If I woke up, let's say this was a stock instead of the Dow, and I saw that shooting star, and I saw that it was opening lower the next day, and I could see that the markets were opening lower, that would tell me, yep, I'm going to take profits right within the first 90 seconds to 5 minutes. And that's a whole different training session that we do on entry and exit strategies, just using common sense on how a body or how a price opens after a candlestick buy or sell signal. If you see a doji at a major moving average, does I guess that intensifies the rule that will keep going in a way it opens and starts to trade the next day? How long can we expect this to persist? Jake, I'll show you some before this session is over. And that's based upon the doji rule. Do you also check other time frames for more trend confirmation combining with the T-line? Yes. I have remind me, Dwayne, to when I do blink, which is our big profit trade right now, I'll show you how the 10-minute chart also coincided with that. Andrew, they're all over our website, and they're in my second book, High Profit Candlestick Signals and Patterns. What if the moving average 15,200 or closer, up or down in a current trend, and also the moving averages are very close to each other and creating a tight view, and we see the candlestick signal, then how do we take trade and define risk reward or leave the trade? Hirsch, that's complicated, but the simple answer is we're not buying or selling the 50-day or 200-day moving average. We're buying the candlestick reversal signal. Pre-market just tells us what the open is likely to be. So if I have a candlestick buy signal and the next day we wake up and the pre-market futures are showing that the Dow's going to open up 140 points in the direction we kind of expect, and the stock that we're ready to buy is opening up higher than where it closed the day before, which was a candlestick buy signal, I'm probably getting ready to buy that position in a matter of almost on the open, if it opens higher, or maybe after 90 seconds or 3 minutes or 5 minutes, that after it opens and maybe waffles around a little bit, that it starts moving up, I'm buying into that strength. I think I might have examples of slow curves on here somewhere. Maybe not. Yeah, this is more oriented toward the moving average, and the moving average is using all those signals and patterns. So here's the 10-minute chart. If I'm trading 10-minute or crude oil off the 10-minute chart, and I'm buying here because it looks like it's bouncing back up from an oversold condition, I'm watching to see what's happening here. You can see what happened here. A long-legged doji right smack dab on the 10-minute T-line. So what's my simple trading rule about a doji? It's going to move in the direction of how they open it after a doji. So after that doji, right on the 10-minute 50, if it opens lower, I'm taking profits immediately and thinking about going short. I believe the stochastic, the confirmed strong trend and not sideways trend. Yeah, the stochastics are not, we're not buying stochastics either. If we see a buy signal in the oversold area, that's usually telling you there's probably a reversal. If you see a buy signal in the overbought area, it doesn't mean very much. Same as seeing a sell signal in the oversold area, doesn't mean very much. So the signals and patterns work just as well on the 10-minute. Where is sell exact on the 10-minute chart? If I was long and it came up here and did a doji right smack dab on the 10-minute, 50-day or 50-minute or 50 on the 10-minute, if it opened lower the next day or the next few minutes, I'm closing it out because it's telling me I've got a failure here at the 50. What is the price? What if the price is way above the 8 EMA and an indecisive doji forms? Can we expect a potential yes? And it doesn't even have to be way away from the T-line, but it's enhancing that probability that if you see a doji way above the T-line, that's where the investor sentiment is changing. Do you buy before the close on a very positive buy signal or wait for the open of the next day? I usually wait for the open of the next day. I would rather give up a little bit of profitability than trying to jump the gun, because there's numerous times where you see a very strong buy signal, then something overnight happens and the whole market's selling off, and that one opens up lower. Now what do? Well, if you bought it the night before, now you're trying to decide, do I keep this? Or I would rather buy into strength, confirming the signal. It might cut down a little bit on profitability, but I'd rather have that extensive increase in probabilities. We're not trying to buy at the exact bottom, and we're not trying to sell at the exact top. The more trades we have where we're got a much higher correct trade ratio, the compounding effect is going to be much greater than trying to buy every position at an absolute low and selling at the absolute top. With your stochastics, the blue and red line, what I don't even remember, and you don't even need to know, or I don't even need to know. Yeah, the stochastics are 1233. And all I'm really looking for is buy signals that occur in the oversold area. Oh, we're going slower yet. So there's a hanging man. The almost a dragonfly doji. And it opens lower the next day. That's our reversal. There's our long-legged doji, morning star signal. Where? Right smack dab off the 50-day moving average and closes above the T-line. Where do we sell? There's our bearish engulfing signal in the overbought area. There are two dojis in the chart, and the reason you execute is because it encounters the 60-hour line and not the earlier doji, even though it opened lower. Kirsch, I don't understand what that is or which chart. Yes. Because where are we? We're in the overbought area. We have a bearish engulfing signal. Now, if I was long this, our safety stop would have been right here at the previous day's open, because logic says if you're up here in the overbought area, if the bulls are in control, they shouldn't be able to take it back down below the previous day's open. What, on this one? Yeah, we weren't quite in the overbought area, so you might have seen a little bit of jostling around, but this was more relevant when it occurred at a level that everybody else was watching, if that's what your question was. So on RES, you wait for it to cross above the T-line. What about Jeremiah a week ago? Bring that up when we get to live charts. You wait for it to cross the T-line. Yes, there's nothing here yet to tell us we've got a buy signal or a buy confirmation until we see the signal actual forming. Now, we're not buying when it crosses the T-line because we're probably not even watching this one that day. But that night when we do our scans and see this was a big percent move, created a Morningstar signal to close above the T-line, we've got our game plan the next day. We're buying on positive trading because that tells us not only is it confirming the Morningstar signal, but it's telling us the T-line's not acting as resistance anymore. So we're also using pattern breakouts, such as the bobble breakout. This is one of your highest probability trade. Remember, the J-hook pattern works very effectively. The bobble is just a much more defined pattern. It's a J-hook pattern. You can see where it actually failed the first time, right here at the 50. Pulls back usually to a support level. In this case, it was the T-line. So if we took profits here, we're buying back here because we know that this is a J-hook pattern or a more defined bobble pattern, that if you took this 50-day moving average out of here, you essentially have a J-hook pattern. And what do we expect coming out of this bobble breakout? Very simple. We just stay long until we see a candlestick sell signal and a close below the T-line. Yes, this works for Forex. Candlestick analysis is the graphic depiction of everybody buying and selling during a specific time frame. It doesn't matter whether you're trading stocks, bonds, currencies, commodities, tulip bulbs, anything that has fear and greed in it, you can trade any market with it. The stochastic settings for trading view, please, 1233. And there's nothing magical about that. Sometime about, I hate to think it was that long ago, 35 years ago, the normal, or the, the accepted stochastics at that time was 1455. I'm a swing trader. My trades last anywhere from 2 to 10 trading days on average. So 1455 was a little bit slow. So I sat there one night and just tweaked it. I went 1432, 1351, 1242, 1233, and finally came up with something that pretty much matched where the lows were and pretty much matched when the high occurred. I was just barely, I was in 6th grade, but then again, I was so excited when I graduated from 6th grade, I could hardly shave without cutting myself. So this is what we're expecting. This is, again, convergence analysis. Fry pan bottom. Bobble breakout. strong price move. You use your screens with extended hours or simply trading hours. Bernard, even stocks like Apple, Amazon, all those biggies, they have trading after hours. But if they're trading 14 million shares during the day, they may trade 70,000 shares after hours. And that's not indicative of all investor sentiment. That's just whoever's trading after hours. So I'm more interested in what is everybody's decision. And usually everybody's decision, which includes the institutions, they're not buying or selling after hours because there's not enough volume there. You want to see what they're doing during the day. So somebody was asking earlier, does this work on patterns? Definitely. There is no difference between a J-hook and a bobble. The only difference is a bobble is a J-hook pattern that has a definition to it, or much more defined. You can see where the selling occurred. You can see the resistance level. So this is a J-hook pattern, but you can see that it failed at the 50, supported at the T-line, and came back up through the 50. So you'd still have a J-hook pattern if you took the 50 off this chart. It just is a lot easier to see, and it's usually a little bit more effective than a J-hook, because what do you think everybody else is watching at this level? They're watching to see what happens at the 50. So you've got a lot more people making their decisions at that point. What are your stochastics are close together? Doesn't mean anything. All we're doing, the stochastics mean nothing other than telling us whether we're in an overbought and oversold condition. Can you trade futures after hours and rely on this type of analysis even though the institutions aren't present? Yes, I usually trade soybeans or wheat after hours, or you could trade the dollar. They trade a lot slower, but they're just as effective. So there's a lot of times when I'm sitting here doing doing the research or finding the best trades for the next day, I'll have a soybean trade on. Moves very slowly, but they still work. A J-hook is where it have a strong price move, and then it does a little J-hook. So you've got wave 1, wave 2, wave 3. All right, so candlestick investor has the advantage. They can see what everybody else is watching, a wedge forming. And then we start seeing buy signals and a breakout of that wedge coming out of the oversold area, bouncing off the 50. Again, all that can be seen in one instant glance that there is a wedge setting up. Now they're breaking out to the upside. This told us the NASDAQ was probably in the next trend to the upside. So this is what convergence analysis is, especially using the same information or the same view everybody else is watching. 1, there's a left-right combo, right smack dab on 2, the 50. And 3, it is on a positive open the next day. What is it telling us? It's telling us it's confirming the left-right combo. A left-right combo is a doji followed by a bullish engulfing signal, one of your strongest reversal signals. So if it opens positive, what's it telling us? It's telling us 2 things. 1, that it's confirming the left-right combo, and 2, that it's reaching this the downtrend and staying above the T-line. If I intend to hold a stock for intermediate term, let's say 2 to 6 months, can I use the weekly instead of the day? Yes. So if I'm trading soybeans off the intraday, off the 5-minute and 10-minute chart combination, you might be trading, if you want to hold for 2 to 6 months, you might be using a daily, weekly combination. If the indexes close below the T-line tomorrow, does that confirm bearish left-right made today before yesterday? We'll get to that, AG. Let me look at those. Ask that same question when we pull up the live charts, if we're going to have time. Shoot, we're only halfway through this thing. All right. And there'd be a downward movement coming out of a wedge. Yes, that's exactly what you use the candlestick signals for, is to see which buy or sell signal. Surge, we've got what we call the 10 or the top ranked signals and patterns. My number one choice is the best friend signal, a doji followed by a gap up. The next one right behind it is the left-right combo. Now that doesn't mean one is more powerful than the others. It's just when you see them, they're both very good reversal signals or patterns. So if I can count 1, 2, 3, 4 different reasons to be buying this, that just improves the probability. Same thing with pattern breakouts. If I can see a fry pan bottom and it's breaking out through a major moving average, that's telling me two things. One, it's breaking out of our fry pan bottom, and two, where everybody else is watching, shows you the 200 is not acting as resistance anymore. It confirms your pattern breakout. Fry pan bottom, there's that little doji sitting right smack dab on the 50. What's our doji rule? It's going to move in the direction of how they open it after a doji. So if I'm watching this and I see these dojis sitting here, when it opens positive, I'm buying immediately. Now there's a difference where your stochastics are. You're buying a buy signal when the stochastics are in the oversold area. You're buying a pattern usually when the stochastics are already up in the overbought area. The left-right combo is technically a bullish engulfing, but it is special because of the first, special because the first candle is a doji. And there's kind of a simple assumption that if you have a doji in your combination signal or pattern, it's going to be usually more effective because that doji is representing indecision. So you can have a bullish engulfing signal. That's a good signal. But if you have a bullish engulfing signal after a doji, that's going to be more compelling that there's been a change of investor sentiment. So this is our simple analysis that we can use. Just that 2 plus 2. Fry pan bottom, doji sitting right on the 50. It opens positive. What's it tell us about the 50? It's not acting as resistance. What's it telling us about the fry pan bottom? It's breaking out. And what's our T-line rule tell us? We can stay long until we see a sell signal and a close back below the T-line. This is what dramatically improves the probabilities, is knowing what to expect based upon what the Japanese rights traders have illustrated to us for hundreds of years of what normally happens in investor sentiment. Also allows us to kind of project where our next targets are. If we see a evening star signal and a close below the T-line, what can we expect? We're probably going back down to this level. Now that has two major effects or reasons for us. If this is a 4% move, it may not be worthwhile. If this is a 24% move to get to this level, that's a decent rate of return to put your money at risk. So there's your blue ice failure. They fell through the ice. Notice our dojis, they brought it right back up to the 50 and failed. How did we know it failed? Because it did an evening star signal right here and it closed back below the T-line. If I wanted to day trade using the signals, you can use whatever time frame you want, depending on how active you want to trade. I used to trade the E-minis off the 1 minute, 3 minute, 10 minute combination. If you're wanting to only trade once or twice a day, maybe use a 10 minute, 30 minute combination. So you can pick out whatever time frames work effectively for how often you want to trade. If I am swing trading, should I use a 3-month end of day candlestick chart? It doesn't matter how long the chart is. I usually try to make this is what is important, is what's happening right here. The length of the chart is more that I want to be able to see what's going on here, and I want to see a little bit back to see what type of patterns might be setting up. So this is why I say observe the obvious. Notice how they couldn't get back up through the T-line and they do an evening star signal, close below the T-line. What's that tell you? If you were long, you're out of the trade. Now you're considering going short because where's your next target? Probably back down to the 200-day moving average. There's your bearish left-right combo. If I see a bearish left-right combo, I close out the position even though it hasn't closed below the T-line, because the strength or the probability of that signal working, meaning bearishly, is extremely high. Now notice what you have, a left-right combo followed by a bearish doji sandwich. What do we infer from a bearish doji sandwich? There's going to be more downside. What do we infer about a bearish doji sandwich that closes below the T-line? The probabilities are you're going to have much more downside. Whoops, I just went too far. Same assumption on something like this. If you see a morning star signal forming right smack dab on a resist or support level, remember, if they come up through a resistance level, they'll come back and test it. When we see a morning star signal, why is this more compelling than just seeing a morning star signal? Because everybody's watching to see whether it's going to support here. We can see it's doing it immediately. We're buying right here. Why? Because it's confirming our morning star signal that's already bounced off the 50, and it's telling us this positive trading after the morning star signal that the T-line's not going to be acting as a resistance anymore. Wouldn't the stochastics be different between a 3-month and a 6-month? Yeah. But you look to see what the stochastics are on those time frames. When you talk about the time frame combination, I'm not sure how you use multiple time frames. What do you do with different time frames? If I'm buying something, let's say this is a 10-minute chart, and my 10-minute chart says, up, they're buying, and I'm getting ready to buy, well, I'll flip to my 5-minute chart to make sure the 5-minute chart, which is reacting a little bit faster, is still heading up, so that if I see the 5-minute chart all of a sudden starting to look like this, that tells me the 10-minute chart is probably not going to go much further. But if my 5-minute chart looks more like this, then I know my 10-minute chart is going to keep confirming. Do you buy also at the earlier morning start? At the earlier morning start. I usually probably 80% of my trades are done within the first 45 minutes of a trading day, depending on what the market conditions are. 15% of my trades are probably closing out trades within the last 15 minutes of the day, which means 5% of my trades might be done during the day when all of a sudden you see a big price move during the middle part of the day and your 10-minute chart says, yep, you can still buy this. But most of my entries are within that for 45 minutes. Oh, LS, do you buy also at earlier morning start? Oh, here, I might not have seen this one. Yeah, I'm not buying this one because of that happening. I might have found it at the end of the day to say, all right, this is a cradle pattern, another candlestick signal pattern. So I might, I wouldn't have been buying on that day because I wouldn't have known to be looking for it. I wouldn't have found it until the end of the day. If you have 4 or more time frame charts in the same direction, usually you'll get a good result. Yeah, but that's a lot of charts to look at. I usually use a combination of 2 time frames. which, again, coming from being the worst investor in the world, has worked out well for me. As a swing trader, what time frames? As a swing trader, I'm buying using the daily chart. Then when something gets way out of hand, way too far away from the T line, that's when we flip to the 10-minute chart. Is there a scan for the cradle pattern? No, but it's usually, if you recognize a cradle pattern, you're going to find it based upon you're doing your scan and you see a big percent price move coming off a little dip. Then you can look back immediately and say, oops, there's a flat handle. That's a scoop pattern. So you don't have to scan for a scoop or a cradle pattern. You're going to see it based upon that big price move. You use scanner/software to get buys. Metastock is one. It's very good. And Metastock and TC2000. Do you review various charts? Catherine, yes. We've got a chat room open all day long. One chat room for the room, one for the stocks room. And I'll usually come in for about an hour, sometimes an hour and a half, and we analyze charts on a daily basis. From your experience, is it true that higher time frame are more reliable? Not necessarily, Dwayne. It all depends on what you're trading. How do you judge the star? Did we see? Oh. How do you judge that the star narrow enough to be treated like a star at the height of the body? A little bigger to me compared to the size of the body on either side of the star. I don't know what that question is. How do you judge that the star, this one, narrow enough to be treated like a star? The height of the body is a little big. Carrie will have to. I don't understand that. All right, we're not even halfway done, and we're already an hour into this. That is your bobble breakout. Observe the obvious. They failed at the 50, but they supported at the T line. If I close this out here, I'm ready to buy back here. If the star candle is a doji, then I can see that it is a morning star. Yeah, a morning star doesn't necessarily have to be a doji. It just has to be a day of indecision. It could be an inverted hammer. It could be a hammer spinning top, which is a doji with a little bit bigger body. So this is convergence analysis. Look where our little hammer after a doji, right smack dab at the 50. Now, is this magic? No, this is just visual evidence that that's where everybody's buying. So here's the common sense analysis. If you're an institution and you're an institutional trader, analyst, and you go to your committee and say, yeah, I want to buy this one, but it's drifting, where do you think as an analyst you want to be most protected? You're going to wait to see if the 50 is going to act as a support level. We can see immediately that's where they're making their decision. Convergence analysis is seeing that the 50 is acting as support. Now you've got a buy signal above the T line, and it's opening positive, and it's breaking this downtrend. We basically have wave 3 in progress. Just very simple logic. We can see what's actually happening at that support level. Again, why do the moving averages act like magnets? Because that's where everybody's waiting to see if that's where they want to buy. We can see it graphically immediately. That's where they're going to buy. As a swing trader, do you look at price movement on a weekly or monthly? No. If I see two charts that look just as good as each other, maybe I'll flip to the weekly, but I very rarely do that. I'm usually buying off the daily chart. What is wave 3? If this is wave 1, this is wave 2, wave 3 is the next move. If this is wave 1, this is wave 2, this is wave 3. So this is observe the obvious. A sell signal, a doji that failed right at the T-line, opens lower, closes below the T-line. And what's the overall direction? It's in a downward direction, so that told us as soon as they hit a resistance level, they were still selling. You could go short where there was a support level there for the first target, and your stochastics will get toward the oversold area. This is not rocket science. This is basically just graphics of what normally happens in human nature. Here's your evening star signal, failure at the 200, close below the T-line, gap down. You add all that together, it's very strong, especially with your stochastics rolling over, strong down move. This is wave 1, this is wave 2, and what's the piece of information that we get right here? A bullish harami right smack dab on the 50 tells us the selling has stopped. Then if they gap it up, what's that tell us? Not only has the selling stopped, but the buying has come back in with great force. That's where you want to be buying. Selling stopped at the 50. They gap it up, strong buying. They gap it up to the T-line and trade positive, breaking this level. That's wave 1, wave 2, going into wave 3. I don't know. Chris, it's probably not that relevant. Use either whatever you think is the right thing. You could always start with the 8 exponential moving average and see if that doesn't improve. Or you can put the 8 exponential and the 10 simple on at the same time and see which one seems to act better. How is flutter, kicker signal, left-right combo, and doji sandwich defined? Let's go on with the moving averages. They're all strong signals. I think Jim has given you some of those definitions here. How do you wait for the close above the T-line for that harami? Well, first of all, we're buying the signal. Good confirmation would be the fact that it closes above the T-line. If I was watching this and I saw the next day it was gapping up and trading positive, I'm probably buying it because that's exactly what we would expect on a reversal after a bullish harami. If there's a bullish harami, one of the 12 major signals, and they gap it up, what's my worst case scenario? I'm buying here, it comes up, and then closes back below the T-line. That's that percentage that I want to close right back out. The old process of cutting your losses short and letting your profits run. Is there a way to determine if a particular fib retracement level will be support or not? Sure. I'll do it on the live charts. You just throw the Fibonacci numbers on. Not to see that those are going to be the level. You just throw them on there, and if you see a sell signal at one of those levels or a buy signal at one of those levels, you know that's where the Fibonacci people are buying. Okay, this is all leading up to convergence analysis. The more pieces of evidence. A lot of people have been trading Pola in our chat room. You can see the fry pan bottom 1. You can see that you had a best friend gap up off the 200 that started the buying, didn't confirm the next day. You can see the the 50 acted as support, and you can still see the trajectory of this fry pan bottom. Then there was what we call a double doji setup, where they took it up, doji consolidation, The next day they took it positive, still confirming this. Then they broke out through this level. So you've got probably 5 good analytical reasons to be buying this, because that's pretty much telling you the bulls are taking control. I know visually the difference between a bullish engulfing versus a bullish Arami. How do you react differently when you see them? I don't react differently. They're both buy signals. I want to see if they're going to confirm the next day. So here is the one that we're just making big money. Again, you can see the fry pan bottom setting up. You can see that we closed back up above the T-line. So this could have been a wave 1, wave 2, wave 3, which it partially is, but it's still kind of a fry pan bottom. There's your double doji setup. And what was the one aspect that would keep you in this trade this whole time? It could never close it below the T-line. What would be getting you in actively? Well, you're in an uptrend, fry pan bottom, staying above the T-line, and now there's buying coming in after the double doji, and eventually closed above this level. This stock, we got in down in here, and it has doubled in the last 4 or 5 trading days. So do all our positions do that? Absolutely not. But what I have found through the years is when you're putting everything together, the probabilities of being in one of these trades is greatly better than just any other technique. Moving far away from the T-line, yes. So now we took some profits today, and I'll get to that when we get to the live charts. That's not what we want. Kendai, same scenario. This is a McMuffin pattern. That's your Morningstar signal, followed by a doji sandwich. A doji sandwich that took you up through the T-line. This was after earnings that were bad, but the future looked good. And this one has more than doubled over the last few days. Now, you had support at the 50. You had a McMuffin, a close above the T-line, then a breakout, kind of a breakout of that resistance level. So these are all things that we can analyze. And then on top of that, an additional factor is we knew that the electric vehicle sector was acting very strong. So not only could we confirm it, you've probably heard so many adages like sell in May and go away, or Santa Claus rally, or anything that kind of is supposedly is a truism. The advantage we have with candlesticks is we can see whether that truism is working or not. The information built into a candlestick signal just allows us to see what's happening or alert us that we want to be in or take a look at that trade. WWR, lithium mining. Look at all the dojis right here at the 50, and then they break out. Well, that told us immediately we should start looking at this, that something's happening. When it broke out before, it ran like a scalded dog. Now we've got the prospects, except the next day it didn't open properly. But now look what it's doing. It's still creating this fry pan bottom. It's still above the T-line. So we've been buying this because the pattern looks good and the prospect of percentage returns look good. I think this was trading, well, it was trading up after hours. It closed at like 584. It looks like it's going to open up at 6 or better again, or open positive again. But the rate of return, if it moves up here, you've got an 80% return. Moves up here, you've got 120% return. So essentially what we have visually is something new happened in this, and it's following through. And these are the pieces of information that allow us to do convergence analysis. So that's what we're going to be doing this weekend, all day Saturday. So Becky, you have the links for everybody. Non-members, it's $397. Obviously, for members, it's the 197. So some people say, well, wouldn't it be smart for us to pay to become a member and get the 197? Yes, that is our tricky marketing strategy. But if you come in and buy a 30-day membership, you're going to find out you're getting a lot of information about candlesticks that makes sense. And it doesn't matter what trading program you're using now. You put candlestick charts on your charts as you're trading that any other program, you're going to get a much better view of what is happening. Moving forward, okay. Are there such things as monthly pivots, or can you use daily pivots for all your time frames? Yeah, if you want to trade the pivots, yes, you can use them. And if you know where your pivot points are, you can see with candlestick signals where those levels are, and seeing what's happening at those levels. So let's see. We're going to go to the live charts here in a minute. Jake, there's pivot points that seem to be where things move a little bit better. That's a whole different trading technique. Okay, so let's do this. I almost had it. So, do you draw trend lines? Yes. I can draw any type of line I want to. If this is the breakout level, whoops. Oh, so close and yet so far away. I can draw the lines. I can see where the resistance levels, like anything else, we're watching to see what type of signals or patterns or what type of signals are occurring at what everybody else is watching that might be a support or resistance level. So today, I mean, it was up 22% or something. This was Blink. So we go to our 10-minute chart. And you can see that it moved up, didn't close below the T line, closed below the T line. So we started taking a little bit of profit. But then it came back up. I say a little bit of profit. We sold out half the position today for two reasons. First of all, we bought here, got huge profits. Now we're way above the T line. So and what's the warning here? The further away you move from the T line, the more you want to start watching for sell signals. Let me take a gander here real quick, or let me take a look at why we were buying some of these positions. Now, obviously, we were buying this one because we could see the fry pan bottom, and look at the double doji breakout. We recommended Viri because there was your bullish flutter kicker signal, also enhancing this fry pan bottom after it supported here at the 50. So what did the bullish flutter kicker do? It kicked us out into this next trend. The 34 EMA works reasonably well. And again, it's one of those things, Andrew, that if you want it on there, put it on there. If somebody says try the XYZ indicator, I've got a basis, which the basis is the signals themselves, and then a few indicators. As you can see, the chart's not really all that cluttered. The most important aspect of any buying and selling are the signals and the pattern breakouts. So the 34 works reasonably well. If you put on something and it doesn't seem to work, take it back off. Don't clutter up your chart. So there's 2+2 analysis, yes. Closed above the T line, supported at the 200, that gives me a pretty good indication that I could be buying this one on positive trading tomorrow. The 3 EMIA works better when you start moving too far away from the T-line. It becomes a quicker indicator. And 2, it works as a confirming indicator. But if you see buy signals and a close above the T-line with the signals, if they start bringing the 3 T-line up, it just adds as a little added confirmation. NETI, another one that showed a double bottom right off the 200 and a fry pan bottom. And there's your double doji setup. I don't know what this line is. But you can see the fry pan bottom and you can see the additional confirmation. The bottom left of your charts are cut off. They are, okay? I was looking at the top. Let me get to the bottom. How's that? Yeah, you could buy 3D. We recommended space today. Whoops, didn't want to do that. SPCE. See the bottoming action. And let me make this smaller. A little bit bigger. A little bit smaller. You can see how there was again, this is where you draw your trend line that everybody else is kind of watching. So what happened in space today? That's not what I wanted to do. Do this. We could see there was a resistance level. We could see the J-hook pattern. Now, what do we know about a J-hook pattern? We know that usually wave 1 and wave 3 are going to be the same. So if we can kind of prognosticate the wave 3 is going to be the same, what's it tell us about this resistance level? It's not going to act as resistance. We're breaking out into new territory. Gary, the earnings for Blink, weren't they already reported? This one here is the 34, yes. Gary, if yeah, I think, hasn't Blink already reported their earnings? Even though they're negative. Remember, people were buying Amazon for years, and they never had positive earnings. They were buying on what the investor sentiment, and that's one of my great statements is candlestick signals are people, let's see, I'm saying this wrong. Prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And that's exactly what candlestick signals illustrate, is what those, what that sentiment is. So people weren't buying earnings on this one. People were buying what the future might hold for a company that's setting up apparently all the charging stations for electric cars. Cut out the left side of the chart because he loves Kramer. Okay. That's right. So things can be observed as setting up. Here's a J-hook pattern. Look where the kicker signal occurred to start this first uptrend. Look where the evening star signal. There's your shooting star. Look how far away you were from the T-line. Where was your safety stop? Probably right here. Because if they opened it positive and went positive, you're still good. If they started coming back down, where do you think the first target was going to be? Right here. Gary, no, we're not buying. We're not buying based upon some preconceived facet that they have to have positive earnings. Let's put it this way. If we weren't buying Blink that had less negative earnings than they did last time, we would have missed out on a 100% move. That's a 100% move on the stock. The options were just through the roof. Is it too late to get into Blink? Yes. And so when you ask that question, and I put this on everybody, when you ask that question, is it too late to buy? If it's up 100%, more than likely it's too late to buy. But what should you use that chart for? Say, all right, where should I have been buying? And the next time I recognize this type of thing, that's where I should be buying. Yep, so we're buying what everybody else is buying. Now, have you often seen when somebody comes out with fantastic earnings and the stock drops like a rock? Or somebody comes out with terrible earnings and the stock takes off? That's because people were buying and selling based upon what their expectations were. And if they came out with fantastic earnings, maybe they weren't as good as what everybody was expecting, even though they were good. This one is, you can still be buying this one. It's not as strong as NIO. We've been in NIO for a while because it's been a nice steady eddy. And look at the double doji setup that it did today. And what did it do? It hasn't been able to close below the T-line. So we've got calls on this one. If the index is closed below the T-line tomorrow, okay. Yes, that would be a bearish engulfing. If they open up the markets trading lower tomorrow, yes, that's confirming that left-right combo. Now, the other side of that coin was that today the NASDAQ actually did a bullish engulfing signal off the T-line. So that's still a little bit evidence that we're still in an uptrend. Oops, I haven't even gotten through the ones. So Apple, that's not a good-looking chart. Yeah, if the indexes are, let me see where. Right now the futures are down 250 points on the Dow, down only a half a point on the Qs. But that doesn't matter. What matters is where are they about 7 minutes before the market opens. That's the true indication of everybody putting in their buy and sell tickets. Apple, not really a fry pan bottom. It's more of just a bottom. But you can see which way it's going right now. This is occurring in all the major traders. Amazon, absolutely sideways. Netflix, sideways. So all these charts that are usually the big traders, there's nothing there. This is NVIDIA going nowhere. That means you want to, more like a deep fryer, okay. You want to be trading something else at this point. Bearish kicker yesterday? No. It is a dark cloud. Now this will be something that we kind of do in our training lessons on Tuesday or Wednesday nights. When they gap up in the overbought condition, If they immediately start trading higher, you put your stop at where it opened. Because when they gap up, remember what the Japanese rice trader, where do most people buy? They buy exuberantly at the top. This is a sell signal. Watch to see whether they start trading lower. At least you can kind of perceive that the next target is down to the 50-day moving average. Yeah, Netflix is slightly down, but it's slightly down. And it's not even slightly down. It's just sideways. So here's the rhetorical and simple question. Which direction is this stock going? Well, if you can't tell whether it's going up or down, move your money someplace else where you can get much better vision of which way it's moving. That's got kind of a J-hook pattern. Here is one, again, convergence analysis, a double bottom, Morningstar signal, bullish harami, right smack dab on the 50. Then you had a little best friend gap up through this level. Today it came down. Here's another aspect of the T-line. If you see them pull back, remember, if they bounce up off the T-line, it's not because everybody's sitting there saying, oh, I'm buying at the T-line. Nobody has the T-line on their charts. It acts like a natural support and resistance level. We use the T-line we use the T-line as an added confirmation of investor sentiment. How do you do shorting? It's very simple now, Andrew. If you just go to whatever trading platform you're using, you can sell something by just putting in a sell ticket. Yeah, you need a margin account to do it. Things like this one. Look where they belt hold opened, right smack dab on the 50, and came right back up. What did that tell us? They took out a lot of sellers. That uptrend was going to remain in progress. Can we put in a buy for the next day after the close? When you see a red candle, can we put in? I don't understand that question. Oh, no. The candlestick signals work just as well on the long side as they do on the short side. That's why there's 12 major signals. There's your evening star signal. You could start shorting knowing that it was coming back to this level. On Kirk was based on the fry pan bottom, the double bottom, the best friend gap up, and telling us that more than likely we're now into wave 1, wave 2, going into wave 3. So the signal was right here where you had a doji best friend gap up through that level after bottoming, a double bottom. That was the buy indication. Oh, yes. So if let's say you wanted to buy this one, and you're not around at the open, maybe you put a buy stop here at 1250, that if it comes up through there, it'll kick you in. Whoops. BBEC. Oops. That one's not coming up for some reason. GBTC. No, that one's not coming up. Oh, it's yeah, that one doesn't come up on this system. DraftKings. There's your Morningstar type signal. There's your McMuffin. Let me make this bigger. Your McMuffin, a Morningstar signal followed by a doji sandwich. Look how it consolidated right here on the T-line. Now, when I say look how it consolidated right on the T-line, you got to keep remembering nobody has the T-line on their chart. So this acted like a natural support. Then we had a Morningstar signal and a doji right smack dab on the 50. It opened positive today, telling us that's confirming the fact that the 50 is not acting as resistance anymore. There's still a good probability we're heading higher, but the first target right here filling this gap. So if we can always put the probabilities in your favor, look at the left-right combo on this one that started the uptrend. There was a scoop pattern. Look at your flat handle, then your scoop. How long do you stay in this one? As long as it doesn't close back below the T-line. And we recommended this one today because of this. You can pretty much draw a resistance right through the tops. Oh, I hate when I do that. Now, you've got a J-hook pattern. If this is wave 1, and there's your J-hook, if wave 3 is the same as wave 1, what's that tell you about your breakout area? Tell you they're going to break out. Once they break out, then you don't have any idea how hard and how fast they might take up that next move. Trill, same scenario. There's your fry pan bottom. There's your doji sandwich up through the 50. So you got this big fry pan bottom coming off the 50. You just stay long. Before 3 p.m., how can you find if it is a green or red candle? I don't understand that, Aqua. Oh, a lot of chart services, you can update it whenever you want to. You just go in and say refresh. And yeah, you'll find stocks that are moving. Solo, another fry pan bottom breakout. But now look how far away you are from the T-line. This is where you start looking to take profits. And Billy, this broke out with a trend or a kicker signal. That tells you now have, so look how supported right on the 50, and now they've broken out with a trend kicker through that congestion area. So that's got more upside. So essentially all these charts are giving you high probability setups. Came up through the 50, used the 50 as support. Now did a best friend signal. At least we know you're getting close to the first target, but more than likely this is a J-hook pattern that's going to take you much higher. Okay. All right, we'll do a few more. Well, we're at 9:45. Jim, if you do the double line, everybody just put in one request. I'll try to do these. Now, remember, the answer to the question, if you've got all these good-looking charts, how do you find the best ones? That's where what I call convergence analysis works very well. ENPH is just a steady uptrend. And Jim, do the next double line. Ooh. ENTG, that's just about ready to do a J-hook pattern breakout if it trades positive tomorrow. Morgan Stanley, nothing wildly exciting if you want to stay long, especially if this opens positive tomorrow. There's your double doji setup. Apps, yep. So now this is a nothing chart, no direction until you see which way they want to take it. And those dojis tell you that exact information. They don't know which way they want to take it. Is RY a symbol? You just stay long. You're in the overbought area, so I always use the low of the, that's a hanging man signal. Put your stop just below today's low. It shouldn't come back through that level, or that's a confirmed sell signal. And Riot, stay long. Now, I'd put my safety stop at today's open if I'm long. It should be going in this direction. If it comes back down through there, that's where the indecision is being illustrated. You want to close it out. SRNE, this is, well, there was your bearish kicker signal. There was your buy signal right off the 200. There was your confirmation to be buying. I would suspect your first target is the 50-day moving average. GRFS, nothing yet, but you do have the potential of a bobble breakout, which means if they open this positive after the failure here at the 200, your J-hook type pattern is going to be, yes, got that breakout potential. Taiwan, this one you just stay long as it stays above the T-line. Marvell, you just stay long as this stays above the T-line. Disney didn't have anything real extravagant. Wouldn't be trading Disney. That's just not a great chart. Worst case is if you're holding it long term, you stay long as it stays up above the T-line. Pod, another one where you just stay long. You can be buying this one on positive trading. Then you watch to see if the J-hook pattern gets through this level. Limey, whoops, missed a few. That one you can get ready to buy on positive trading. Kind of a slow curve right off the 50. Get ready for additional buying. And CDEV, this one looks like a fry pan bottom. You stay long on this. Make sure you've got big volume on this. But I would definitely put a stop, my safety stop, below today's open. If it comes back down through there, they failed at the 200. 2U, you can stay long on this one if you like it. Still got some healing to do. It's not your greatest looking chart. This one, that's a nice fry pan bottom. You stay long on this one as long as it stays above the T-line. Tesla is still very strong. Out of the biggies, it is the good chart with this gap up message. Again, that was based on where they were being added to one of the indexes. But there's your message, which told you they gapped up even though it didn't look good. The fact that they opened and traded positive the next day told you the message was working. There's strong buying. Soybeans, which one? I don't know how to get soy oil, but soybeans are still continuing to trade higher. Look at your little J-hook pattern. You just stay long until you see a sell signal. Krish, I haven't even gotten that far to see which ones. Yeah, I still have to do my scanning. There's another slow curve. You could buy this if it opens above the, or trades up above the 50. Space, you could probably still be buying this one because of the that breakout of this downtrend. Plus, you got the J-hook pattern, which tells you wave 1 and wave 3 should take you up into this area. TDOC has just never impressed me, recently anyways. It's just not a good-looking chart. Now, if you want to be buying it, you do have buying it probably is going to fill the gap, which means your first target is the 50. Beyond Meat started coming back up. So you can see the Morningstar signal, then your doji sandwich, so you kind of got a McMuffin. You can be buying this one with the anticipation that it could be coming back up to the 50-day moving average. Did we do you? Yes. Not anything wildly exciting. Look to take profits. We sold out half the position today. Also took some big profits. I had the 10s and sold them out with big profits. And then, because we haven't seen a turnaround yet, I rolled them out into, I think, the 20s or maybe the 1750s with a lot less money, with the idea that you're in a high-risk area, but if it's still going higher, you're still making some money with less money exposed. Quote, nothing yet, not until they can get back up above the T-line. And OTRK, not enough there, but right now, obviously, it's in a downtrend, Monty. HUSN, this one had something going on, but then you use the doji rule. If it trades positive, you can start buying, and if you start buying, you put your safety stop right here where it closed. NIO did the double doji today. You can see that it's been in a steady uptrend. This stock has gone from $2.50 to 48 over the last 6 months. But that's one of those stocks that are in the hot sector right now, electric cars. Now, REGN stays short. You can see the slow curve breakdown. Stays short. You're getting toward the oversold area. So right now, if I was short, I'd have a safety stop just above today's high. An APD, nothing. I wouldn't be long or short, just going sideways. Salesforce, J-hook, yes. I would probably wait for it to break through this level, but you can see that it's moving in the right direction. So you could be buying this one on positive trading, then you just make sure it gets through kind of that area. Whoops. QCOM broke out a few days ago. You stay long, use the T-line as your safety stop. And Advanced Micro is just not an exciting trading stock either. It's just been junky this whole past few months. If you like it, there is the double doji setup. You can stay long, just want to make sure it can break through this little downtrend area. Plug. Stay long, use the T-line as your stop. We did pod. You can be buying this one. Intuit. You can stay long on this one also. Look at your bullish Harami. There was your shooting star. It opened lower. Where do you think they were bringing it back to? Right to the T-line. Bullish Harami told you the selling had stopped. Typo, I entered it twice. Which one was that, Louis? I don't remember. Should we wait until space breaks the previous high? Well, Pshaw. That's up to you. If you want to, if you want to wait for it to break out through that level, yes, but I think there was a trend line that it did break today. And Coop, another one that you can buy. I'd wait for it to break through this level, so it's almost there. Overstock started up, but backed off a little bit. You can see all the dojis down here, kind of a cradle pattern. If you're buying this one, I'd be more apt to buy it as soon as it comes back up through this level, telling you they're bringing it back up. But you can see you're in a downtrend, so it has to break that downtrend pretty quick. So new, coming out of this big fry pan bottom, look for a 45-degree off of here. COF, that one you get ready to short if it opens lower tomorrow. It's down below the T-line, and after a left-right combo, if it opens lower, now you got a bearish doji sandwich in progress. Unquote. Would you wait till it gets over the 50 since the T-line is so close to it? No. We're not buying the 50. If you're buying it, I would be ready to buy it and then just see what happens once it gets to the 50. How do you consider NIO's future over the near term? Well, the whole sector is, is in the forefront right now. The whole electric car aspect. So I can't make any judgments of what it is or where the potential is. All I know is I will stay long on these electric vehicles until we start seeing sell signals. Do you consider NIO's future over the near term 2 months likely to go? Have no idea, CB. For all we know, they may gap it up tomorrow and bring it back down, and that's the end of it. Have to analyze it day to day. ESPR, not anything great, but as long as it stays above the T-line, you can stay long. Micron, stay long. Peloton, nothing. Wouldn't be long or short. It's in a downward drift. I'd be someplace else. Deere, slow uptrend. You can stay with it. Caterpillar, slow uptrend. You can stay with it. Roku, this one is about ready to break out again. You could buy this one on positive trading. Your first target, though, is watching to see what happens here, but then see if you're in the next wave like this one. Knee, this one you can go short. There was your bearish belt hold. Tried to come back up. There's your hanging man. If you were anything, I wouldn't be in it. If you're going short, then you just have to watch to see what it does at the 50. NVIDIA, nothing. Just sideways. I'd be someplace else. Waleed, I come in usually before I come into the main room, which is usually around 11:15 or so. And spend 15, 20 minutes there before I go over to the main room. Then I try to come back in again before the end of the day. Or if I see something in the options, I'm watching both rooms all the time. If I see something that looks interesting, I will put it in there that was buying. Had a couple buys today, if I can remember what they were. Snap, starting back up. If you're buying it, you want to make sure it eventually gets up through this level. And Zoom was not doing anything of any great consequence. Would not be long or short Zoom right now. Chewy, another one that has kind of a bullish doji sandwich, bounced off the 50, but you're right here at this resistance level. If I was buying this, I'd buy it if it comes up through today's high. That would give you another doji sandwich and telling you it's breaking that level. Had a doji sandwich, doji today. If open positive, would you buy, assuming another? Yes. You mentioned you hold longer. Yeah, I've got in a couple accounts, this is a longer term hold. Obviously on a short term basis, it's been stronger than bear's breath. So on the short term accounts, I'll take profits of first sell signals. On longer term accounts, it'll have to be a real strong selling to keep from holding this longer term. And it's just because I think the electric vehicle area is going to have some strength. And my long term is 6 weeks or greater. Varna, all you can do here right now is stay long as it stays above the T9. Roku is up another $35, so it's up in this area. All right, so that's a good breakout. Boeing, you've got that dark cloud. If I was long, I'd have a safety stop at today's open. It shouldn't come down through there. If it does, it's confirming the dark cloud. Daku, nothing real exciting on this one. I mean, if you like it, you can stay long. It's just I'd have my money elsewhere. SFIX, nothing here yet. You do have a bullish engulfing. I wouldn't do anything until it breaks through this level. SPWR is one of the J-hook type pattern setups. Same thing with CYH, another J-hook pattern setup. The gold index or gold, that's still heading lower. Gold right now is still heading down. Natural gas. I haven't traded natural gas in so long. Let's see. Is it NGAZ? Natural gas is still heading lower. Look at your bearish left-right combo. Look at your bearish J-hook pattern. Look at your failure at the 200. Just stay short until you see confirmed buy signal. And Nikola, nice J-hook pattern. I'm sorry, fry pan bottom pattern. Stay long. I'd just be a little bit diligent to see what's happening there. Could we list electric car related stocks to make a list? Oh, here's one. Green Power. Here's another one, HYLN, which reversed on this McMuffin right here, so you stay long as that stays above the T line. Blink I put in that category because it's the stations for the charging. Kendai, I can't think of, I'm sure there's others. Can't think of them right offhand right now. Workhorse, that's a nice fry pan bottom. This one can be bought. Oh, that's right. LI has been acting well. You can stay long on this one. And XEPV, thank you. Another one that's moving up nicely. And I bought calls on this one because there was the alert. There's kind of the continuation. And the reason like this is we're trading it, I think, after hours. Let's see where it's trading right now. 602. So it's up a little bit. But if this gets moving with the same enthusiasm as this, even with half the enthusiasm as this, even if it comes up right into here, that's an 80 or 90% upside. And then, yes, Tesla, the big gorilla in the industry. But I think Ford Motor Company is doing some work now on electric cars. CBAT took a hit yesterday, but came right back to the T-line and did a bullish harami. This one's probably got a good play to it. If it opens positive, got a J-hook type pattern. So there's your classic. Classic is a fry pan bottom, creates a strong price move breakout. Pulls back and does a J-hook. That's the classic pattern. HYLN, again, had the McMuffin. Here's your Morningstar signal followed by a doji sandwich. All you can do here is stay long as you stay above the T-line. And then lithium is another one that makes the, I put the lithium miners in that same category, making the stuff for the batteries. Okay, I've kept us way past time, so yeah, if you want to put all this together and figure out how to get to the best trades, that's where the convergence analysis. So that is my final analysis every night, is if I've got 15 good charts and I've got to cultivate them for the best one or two the next day, I just look at all the aspects that kind of make one better than the other. So that's what we're going to be doing Saturday. These Saturday sessions are good because you get to ask a lot of questions, and we get a lot of good feedback. People say, "Oh, the light came on when we did that session." So with that, everybody, have a good evening. We will see you bright and early tomorrow morning in the chat rooms. We'll see you then.